Welcome back to another episode of JRNY TV. Today we are talking about Chainlink to $100, the road to $100, and why this is inevitable. Chainlink has been called the backbone of blockchain infrastructure, the gold standard of oracles, and the key to unlocking real-world adoption of smart contracts. But with Link currently trading well below its previous all-time highs, many investors are wondering, can Chainlink really hit $100? And if so, when? Well, the answer isn't just yes, it's closer than most people think. In this video, we will break down exactly why Chainlink is primed for explosive growth, covering the key catalysts driving adoption, the power of its tokenomics, institutional integrations, and how staking could in fact create a supply shock that sends Link soaring past triple digits. We'll analyze market cycles, competition, and the broader crypto landscape, giving you a complete picture of what it will take for Chainlink to reach $100 and beyond. By the end of this video, you will have a clear roadmap to understanding Link's true potential, not just in this bull run, but for years to come. This opportunity is right in front of us, but will you position yourself before the breakout happens? Stick with us here on JRNY TV, and let's dive in. Chainlink continues to bridge the blockchain and real-world data. In the rapidly evolving landscape of blockchain technology, Chainlink has emerged as a pivotal player, seamlessly connecting smart contracts with real-world data. As a decentralized oracle network, Chainlink enables blockchains to interact with external data sources, APIs, and traditional banking systems, thereby expanding the applicability of smart contracts across various industries. This capability addresses a fundamental limitation in blockchain technology, the inability to access off-chain data in a secure and reliable manner. Chainlink's architecture is designed to ensure data integrity and security. By decentralizing the process of fetching and verifying data through multiple independent oracles, Chainlink mitigates the risks associated with single points of failure and centralized data providers. This decentralized approach not only enhances the reliability of the data fed into smart contracts, but also bolsters the trustworthiness of the blockchain applications that depend on this data. The significance of Chainlink's technology has not gone unnoticed. The network has secured numerous high-profile partnerships and integrations, collaborating with industry giants such as Swift and Coinbase, just to name a few. These alliances underscore the growing recognition of Chainlink's value proposition and its critical role in the future of decentralized finance and beyond. Let's dive into the growing demand for oracles and why Chainlink is essential. In the world of blockchain and smart contracts, data is everything. But the problem is, blockchains are isolated by design. They can't natively access real-world information like price feeds, weather data, or sports scores. That's where Chainlink's decentralized oracle network, known as the Dawn, becomes invaluable. Chainlink acts as the trustless bridge between blockchains and external data sources, thus allowing smart contracts to execute based on real-time, tamper-proof data. As blockchain applications expand beyond DeFi into areas like gaming, insurance, and real-world asset tokenization, the demand for secure, decentralized oracles is set to explode. Chainlink isn't just the leading oracle provider, it's the gold standard. Unlike centralized oracles that rely on a single point of failure, Chainlink aggregates data from multiple independent sources, ensuring accuracy and security. This prevents manipulation and flash loan exploits, which have cost DeFi platforms hundreds of millions in hacks. The importance of this security cannot be overstated, especially as institutional adoption increases. Traditional finance giants, including Swift, Google Cloud, and major banks, are already exploring Chainlink's technology to connect their systems to blockchain networks. But what does this all mean for Chainlink's price? The utility of Link, the network's native token, it in fact scales with adoption. Every time a project integrates Chainlink's services, the demand for Link increases as it's required to pay node operators and secure the network. As blockchain adoption accelerates, more data feeds, cross-chain capabilities, and real-world integrations will continue to drive Link's value higher. This is why analysts see Link at $100 and beyond as not just possible, but inevitable. In the next section, we will explore the market factors, tokenomics, and the historical trends that support this bold price prediction. Okay, we're gonna get into some tokenomics and scarcity. What is the fuel behind Link at $100 and beyond? One of the most overlooked factors driving Chainlink's price potential is its strong tokenomics. Unlike inflationary assets that dilute their supply over time, Link has a fixed maximum supply of 1 billion tokens, creating an element of scarcity similar to Bitcoin's hard cap. But what truly sets Link apart is its growing utility. As more projects integrate Chainlink's oracles, the demand for Link tokens increases exponentially. Node operators need Link to participate in the network. And as adoption rises, so does the need for more staked collateral to secure data feeds. This combination of scarcity and growing demand creates a perfect storm for price appreciation. Chainlink's staking mechanism is in fact a game changer. Staking ensures that node operators have skin in the game, reinforcing security and decentralization across the network. Historically, crypto assets with strong staking incentives and real utility, such as Ethereum post-merge, have seen massive valuation increases due to supply crunches. Another key factor to consider is historical performance and cyclical trends. In the last bull run, Chainlink surged to an all-time high of $52. Despite the fact that staking wasn't even live yet and institutional adoption, it was still in its infancy. With more use cases, broader adoption, and a new market cycle brewing, analysts believe a $100 price target isn't just reasonable, but in fact it may be conservative. The next section, we will break down the key catalysts and external market forces that could send Link soaring past this milestone. Institutional adoption and enterprise integration, the big money catalyst. One of the biggest factors that could send Chainlink soaring past $100 is institutional adoption. Blockchain is no longer just a playground for retail investors. Big money is entering the space, and they need secure, reliable data solutions. Chainlink has positioned itself as the go-to oracle provider for enterprises looking to bridge traditional finance with decentralized finance. Swift, Google Cloud, and major banks are already testing Chainlink's technology to enable on-chain settlements, cross-border payments, and tokenized real-world assets, known as RWAs, just to name a few. This growing enterprise adoption is laying the groundwork for massive demand for Link tokens. The launch of Chainlink's cross-chain interoperability protocol, known as the CCIP, is another game changer. This allows traditional financial institutions to connect seamlessly with blockchains, opening the door for a multi-trillion-dollar market of tokenized assets. Imagine a future where stocks, bonds, real estate, and commodities are all traded on-chain, powered by Chainlink's secure data feeds. As more institutions onboard, they'll need Link to secure transactions and facilitate data transfers, thus driving demand through the roof. Unlike speculative altcoins, Chainlink has a real growing user base, making its price appreciation based on fundamentals rather than hype. We have seen this pattern before. When institutions enter a market, they don't just buy, they accumulate aggressively. Institutional-grade investors don't just make moves based on speculation. They follow infrastructure and utility. Chainlink is providing the key infrastructure for the next wave of blockchain adoption, which means when the big players move in, Link could see an exponential supply squeeze. In the next section, we will dive into the market sentiment, technical analysis, and the psychological factors that could trigger Chainlink's parabolic run past $100. Beyond fundamentals, market sentiment and technical analysis play a crucial role in determining Chainlink's price trajectory. Crypto markets move in cycles, and understanding these patterns can help identify when Link is primed for a breakout. Historically, Chainlink has been a late-stage performer in bull markets, often rallying after Bitcoin and Ethereum establish strong uptrends. In 2021, Link surged from $1.50 to $52 in less than a year. Now with on-chain activity increasing, staking live, and institutions finally stepping in, analysts believe a similar move could send Link to triple digits in the next cycle. From a technical perspective, Link has been forming a long-term accumulation pattern, a textbook signal that big players are in fact quietly buying up supply before a breakout. Multiple analysts have pointed out that Link's multi-year resistance around $20 is the key level to watch. Once Link breaks past the zone with strong volume, it could in fact trigger a parabolic rally as momentum traders and institutions alike begin to experience the FOMO. Additionally, on-chain data shows large wallet accumulation, a signal that smart money is in fact preparing for a major price expansion. Beyond charts, psychology plays a huge role in crypto bull runs. As Link approaches key levels like $50 and $75, media hype and social sentiment could amplify its momentum. As we all know, we have seen this before with assets like Ethereum, Solana, and Cardano, just to name a few, where once a coin enters price discovery, the rally becomes self-sustaining. With a strong combination of fundamentals, institutional backing, and bullish technicals, Chainlink hitting $100 isn't just a possibility, it's a high probability event. In the next section, we will break down potential risks and challenges Link faces on its path to triple digits, and how investors can navigate volatility while maximizing their gains. Okay, so let's take a minute to talk about those things called the potential risks and challenges. Can Chainlink overcome market uncertainty? Well, while the case for Chainlink hitting $100 is strong, no investment is in fact without risk. The crypto market is highly volatile, and Link is not immune to broader market trends and macroeconomic factors. Historically, Chainlink has lagged behind Bitcoin and Ethereum in the early stages of bull runs, meaning patience is key and required for long-term investors. Additionally, macroeconomic conditions such as interest rate hikes, regulatory uncertainty, and global financial instability, just to name a few, can in fact delay or suppress crypto rallies. Even fundamentally strong projects like Chainlink can experience extended consolidation periods, making it essential for investors to manage their expectations and risk. Another challenge is competition in the Oracle space. While Chainlink is the undisputed leader, other Oracle providers like Band Protocol, API3, and Pyth Network are all emerging as competitors. Some of these alternatives are offering lower cost Oracle solutions or more specialized services, which could fragment the market. However, Chainlink in fact has a first mover advantage, deep liquidity, and an extensive network of partnerships, making it difficult for newer competitors to gain significant traction. Moreover, Chainlink's continued innovation, such as staking, CCIP, and AI-powered data feeds, ensures its dominance in the Oracle sector. Lastly, investor sentiment and hype cycles can play a double-edged role. While FOMO can push Chainlink's price even higher than fundamentals justify, hype-driven rallies can also lead to extreme volatility. We saw this with Solana, Dogecoin, and other high-flying assets in 2021, where massive gains were followed with brutal corrections. The key takeaway? Risk management is crucial. Investors that are looking to ride Link's rally to $100 should in fact have a strategic exit plan, using profit-taking strategies, trailing stop losses, and diversified portfolios to secure your gains. In the final section, we'll lay out a long-term strategy for Link, ensuring that investors can maximize profits while protecting their capital. How to maximize Link's potential? What is the long-term investment strategy? With Chainlink's fundamentals stronger than ever before and a clear path to $100 and beyond, the question now is, how do investors maximize their gains while managing their risk? The first step is accumulation. Smart investors don't FOMO into pumps. They buy during accumulation phases when sentiment is low. Historically, Chainlink has seen multi-month consolidations before explosive moves. Accumulating Link before it breaks key resistance levels, especially below $20 or $30, provides the best risk to reward ratio. On-chain data confirms that whales and institutions are already accumulating, signaling that the best time to position is before the hype wave kicks in. Next comes staking and passive income generation. With Chainlink staking now live, investors can in fact earn rewards while holding Link, reducing sell pressure and increasing the token's scarcity. This allows investors to compound their holdings over time, a strategy that has proven effective with assets like Ethereum post-merge. Additionally, a portion of Link profits should be reallocated into stable assets such as Bitcoin, stablecoins, or even real-world investments to lock in your gains. The worst mistake investors can make is riding a pump without taking profits, only to see their portfolio crash when the market turns bearish. Profit-taking strategies are crucial for long-term wealth preservation. Finally, the key to maximizing Link's upside is to stay ahead of market narrative and adoption trends. Chainlink is continuously expanding, from CCIP enabling blockchain interoperability to real-world asset tokenization and AI-driven oracles. Staying informed on new developments, institutional integrations, and major partnerships will in fact help investors identify when Link is poised for its next big move. Chainlink's journey to $100 is not a question of if, but rather when, and those who position themselves strategically will be the ones reaping the biggest rewards. The opportunity is here. The question is, will you seize it? Chainlink is not just another altcoin. It's the infrastructure layer powering blockchain's next evolution. With institutional adoption, staking, and real-world integrations on the rise, the case for Link at $100? Well, it's never been stronger. But the biggest gains in crypto don't go to those who follow the hype. They go to those who position themselves early, before the breakout happens. The roadmap is clear. Narrative investing, smart accumulation, risk management, and long-term conviction. We've seen this story play out before with Ethereum, Solana, Bitcoin, and countless others. The difference between those who make life-changing money and those who watch from the sidelines comes down to action. Chainlink is setting up for its biggest run yet. The question is, are you ready? If you found this deep dive valuable, be sure to like, subscribe, and hit that notification bell so you never miss out on the next major crypto opportunity here on JRNY TV. Drop a comment below. What's your price prediction for Link in the next bull run? And as always, stay ahead of the game. The future belongs to those who prepare today. Thanks for watching JRNY TV. We'll see you in the next one.